Good morning, Bill Bodner, Mortgage Market Guide. Thanks for tuning in to our MMG weekly recap. So up on the screen, early morning on a Friday, mortgage-backed securities still at it. A lot of green the last few months. Goodness gracious. I mean, look at this rally since, mid to early June. A lot of green candles, prices moving higher. 10-year note yield at 54, going to probably move even lower heading into the weekend, separating itself from that line in the sand of support at 60 basis points, which is remarkable. It means that rates probably have a chance of going another leg lower. Stocks also had a pretty good week. So let's talk a little bit about the NASDAQ. We had, the good, bad, and the ugly. The good is, rates are at all-time lows, probably going to go lower. Housing numbers, incredible. Housing, new home sales and pending sales were just remarkable this week. So great tailwind for housing. On the bad side, we had, what was going on Capitol Hill. We had tech shares up there and the CEOs in this antitrust hearing, and some grandstanding on both sides, during this, these hearings. But I think, if there were a case to maybe break up some of these firms because they get too big, and they remove competition, some of that may have been confirmed on Thursday evening when the earnings came out, because some of the earnings from these firms are just unbelievable. Apple, Amazon, Facebook, just phenomenal earnings. And so that index is going to move higher heading into the weekend with those shares moving to all-time highs. On the ugly side, we had GDP, right? So the economy contracted. The first reading of GDP contracted by 32.9%, which, crazy number. That was actually pretty close to expectations, but that was the worst quarter in the history of our country. Really remarkable, but the market took it in stride because it was expecting it. But what's amazing is that the next quarter, the third quarter, is likely to be the best quarter, maybe growing upwards of 15%. In one quarter. So, this is a temporary nightmare, as we call it, with the COVID. And so, while it won't be a V-shaped recovery, it's easy to see the economy snap back meaningfully because we're coming from such a low number. So that's something to think about. But something else to think about next week, right? And so next week we have, it's a big news week. So this week was incredible with the Fed and the earnings. By the way, just to touch on the Fed for a moment, they, of course, alluded that essentially however COVID goes, the economy goes. And so that's what we're dealing with what we've been talking about for a very long time. So finally, we've got to talk about jobs. Next week, we have the ADP report, and we have the official jobs report on Friday. And, those are going to be a big one. So from a, pipeline management, you're talking to folks, rates are going to be incredible for as long as the eye can see. There's no inflation whatsoever, and the Fed is going to continue buying. It wouldn't even surprise us if they maybe even ramp up those purchases of bonds, because what's going to happen is the market is going to be, a lot of paper coming to market, both mortgage-backed securities due to all of these refinances and just activity, and the Treasury market from all this stimulus. So the Fed may be prompted to maybe step on the gas a little bit and buy more, and if needed to, they will. So just an amazing backdrop for housing, and we'll just have to get past this virus, and we will. So better days ahead, but for now, hope this finds you well. Have yourself a great weekend. We'll be back at it soon. Bye for now.